Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. Flexibility is a requirement for survival in the market, and we are having the best example. This is a chart of DXY in front of us. Yesterday, we saw quite a dip on the chart of DXY where it made a low of 105.30, but again we saw immediate recovery on the chart of DXY. Right now DXY or US dollar currency index is standing at 106.56. This is the current market price here. So DXY is still trying to recover from this dip. So overall the levels that we have been talking on the chart of DXY have not changed at all. So the next big support for DXY is around 105 level. So in case market falls again, we can look for 105 as the next support for DXY. And in case DXY tries to recover, then 107.70, 108 will act as the next peak resistance. My dear friend, if you are looking for detailed analysis why I'm saying about these levels, then please watch the video that I uploaded on Saturday, because we had detailed analysis, because most of my regular viewers do not want to listen to the same things again and again, so I do not want to repeat. So if you're new to the channel, please watch the video that I uploaded on Saturday for detailed analysis. Today we will having some volatility in the market, because as you can see, retail sales coming up. Retail sales will bring some volatility to the market, so please be careful, especially beginners, new traders, traders with low capital. Do not trade during the news, because after all it's your hard-earned money. The capital may be less, but every capital deserves respect. So do not gamble with your hard-earned money during the news. Try to observe the market during the news, because the observation will lead to experience. But as of now, please be careful. And those who are experienced traders, you can definitely trade. That's your personal choice. But be careful during the retail sales. And if you look at the Forex sentiment meter of gold, then we can see the Forex sentiment meter is more or less same. 74% retail traders are still on the sell side, and 25% retail traders are on the buy side of gold. And as we all know that usually we see market moving against the direction of the Forex sentiment meter. So now let's have a look at the chart of gold. So this is a 1 hour chart of gold right now, and yesterday there was a heavy stop loss hunting. This was the main reason I have been telling everyone to avoid trading at breakouts, because when there is no proper volume in the market, it can lead to a fake out, and we saw perfect examples of false breakouts yesterday many times. When retail traders thought, or mostly the new traders thought, that there is a breakout and they took a buy position on the chart of gold, immediately market reversed, or the price got rejected from above. I received many messages, I received many emails also, where people have shared the screenshot of their bad trades, how they got trapped in the market. So the main reason is that you need to understand volume in the market, because without proper volume you cannot have a proper breakout. And to understand volume, you can simply focus on the size of the candle if you're a beginner. So one thing you must understand, that right now there is not much volatility in the market, so any breakout can be dangerous. Last week maybe you made good profit in the market, but this week is different, so you cannot expect the same amount of profit each and every day, each and every week. So market changes, the body language, the course of the market changes. That's why flexibility is most important for a trader to survive in the market. You need to be flexible with your strategies, you need to be flexible with your profits, with the situation of the market. Right now market is flat. To be honest, I have not taken any position on the chart of gold for the last 2 days, because that is my trading style. Anyways, enough talk about enough gyan, enough talk. So now let's focus on the levels. Anyways, so as you can see, that the rising wedge pattern that I showed yesterday is still very much valid. And one thing is very much clear, that there are some big sharks sitting around, and there was some heavy stop loss hunting yesterday. We saw clean price rejection from above around this level. So one thing is very much clear. I believe that taking a buy position at breakout is not a safe thing to do on the chart of gold. Okay, you must understand it very well. Do not be greedy, protect your capital. Okay, so the strategy is still the same. In case of a huge drop, okay, in case of a huge drop, you can expect 1730 to 1730 to 35 to act as the next big support for the market, because previously the same level acted as resistance. Therefore right now we can expect the level to act as the next support. And the weekly target for gold, is 1800. As we all know, 1800 is the next big level for gold. Okay. So swing traders, positional traders, there is no trade for you on the chart of gold right now, because as you can see that we do not have much volatility. We are not sure about the direction of the market, so do not try to take any positional trade as of now, because this is not the ideal chart for you. Okay, and day traders, there are certain levels. Okay, day traders, there are certain levels in the market, but keep in mind those levels are not very strong, because as we can clearly see on the chart, okay, that the good levels, 1800 level, 1730, 35, those levels are far away, and right now market is stuck in between. And as a result, okay, you need to be very, very careful. Okay, first of all, you must understand that though market was extremely bullish, we can clearly see a rising wedge pattern on the chart. And yesterday when there was some upside on the chart, we also saw heavy stop loss hunting. We also saw market coming down sharply again. So it signifies that the road is not clear. So as a result, you must be very, very careful to not take any buy position at breakout if possible. In case after retail sales, if market shows a proper breakout above 1786, after news only, okay, if market shows a proper breakout after 786, then take a buy position. But again, if you see a scenario like yesterday, where there was not much volatility, not much volume, but still there was a breakout, avoid. So as of now, okay, apart from the rising wedge pattern where there is a good possibility of market falling, okay, what I see is that right now temporarily market is following the trend line as dynamic support. Okay, so in case during the day, especially during the Asian session and European session, if market comes down and bounces from the trend line, around 1760, around 1770, okay, let me write down again, 1770 to around 1767, okay, there is a trend line support. Keep in mind, trend lines are not very strong, especially trend lines like this. Okay, so in case market comes down and bounces, then only go for a buy position. If you see the market is coming down and market bouncing, then only go for a buy position. One thing, if you look at the chart carefully, then you can see that market is also following the blue line. The blue line is the 50 moving average. The 50 moving average is also acting as a dynamic support to the market. But right now market is trading in a very narrow range, so taking a buy position here is kind of risky. So that's why I'm not recommending. But yes, the trend line may act as support. We are still not sure. So if market comes down, observe the market around 1767, 68 level. If you see market bouncing, then only take a buy position, because still we do not have any confirmation yet. And in case market breaks the trend line, then we have 1755 to 1756 as the next support. Okay, the support level of 1755 to 56 is still valid. Okay, this is also not a very strong support. This is a minor support that will work during the Asian session and European session, especially before the news. Okay, see, not all levels have the equal amount of strength. So as a result, in case of a low volatility, okay, you can expect the market to bounce from the trend line. If market bounces, well and good. If market breaks it, okay, 1755 to 56 will be the next support for you before the news only. Okay, now let's wait and watch how the market reacts. Please be careful during the news. Do not gamble with your hard-earned money. And if you're looking for a good trade, then this is not the ideal chart for you, because still the chart is not clear. Okay, yes, there was some extreme bullishness in the market, but right now we can see that slowly the sellers are joining the party. Okay, so let's wait and watch how the market reacts. Day traders, please be careful, follow proper risk management. No trader is 100% accurate, not even me. Okay, so please respect your hard-earned money, respect your capital, and take position wisely. Okay, bye bye, take care.